Welcome, everyone, to the regular meeting of the Board of Estimate and Taxation, 17th of December, 2007. Would everybody please rise and join me in the Pledge of Allegiance?
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
First order of business this evening is the administration of oath by the town clerk to a new BET member, who we are now going to elect prior to the administration. Okay. Okay. Right. This is to fill a vacancy to our board due to the election of Peter Tessie as first selectman and his virtual simultaneous resignation from our board. So it's pursuant to Section 3 of the town charter that we're to consider appointing Jim Campbell as a member of the BET. We have a motion?
And I so move.
We have a second?
Second.
Okay. All in favor?
Aye.
Unanimous? Thank you. Okay. Mr. Campbell?
Let's do it right here. I need you to raise your right hand. Do you solemnly swear that you will faithfully discharge, according to law, your duties as a member of the Board of Estimate and Taxation of the Town of Greenwich to the best of your ability, so help you God?
I do.
Congratulations.
Thanks.
And now, Jim, most importantly, your nameplate.
Now I feel welcome.
Okay.
Thank you, Mr. Chairman.
Choose any of PC.
Okay. Now it's consideration of applications for budget. Alma, do you want to go through that?
We have no routine applications this evening, which is the first time, I think, since I've been clerk. So
Right.
my last meeting, I don't get to read anything.
So
Chairman.
it'll turn to the chairman of the Budget Committee, Steve Walco.
Thank you, Mr. Chairman. The first item on the agenda is RF1. It's the release of condition professional services, $500,000, and I so move.
Second.
Mr. Chairman, my understanding is that there has been a change in the retirement board guideline relative to this item, and I think it would be prudent to ask Mr. Lavin to come forward and discuss those changes.
Yes, good evening. The Retirement Board asked me to address this issue. I presented this application for the December meeting, and this is the release of $500,000 in professional services. As you will see from the guidelines here, we were directed to create a tool for quantitative measures of guidelines in the monitoring of the investment managers. We submitted this document, which we thought addressed that issue, and we had a discussion with the Budget Committee last week about it. At some suggestions on improvements to it, we took up at our meeting this afternoon at 4 o'clock, and I've, in the color coding here, have inserted those improvements, which I would ask the full board to consider tonight. And at this point, I'll try to answer any questions you might have on them.
Okay. Are there any questions? Mr. Walker?
Just an observation. I think as a result of us putting this condition on the budget, the last year's budget cycle, I think this document is a great step in the right direction. And we look forward to the Retirement Board reviewing this policy and working off of this guideline and coming up with hopefully, which is better performance, which is what we all want. So thank you.
Okay, you're welcome. And Mr. Chairman, may I request that at the appropriate time, if you would recognize our consultant from Boston who has to go home tonight for their report later in the meeting.
Okay, fine.
Thank you.
Thank you. Mr. Walco?
I've moved the item unless there are other discussion points.
I second
Okay, all in favor?
Aye.
Aye. Any opposed? Okay, unanimous. Mr. Walker?
Mr. Chairman, the second item to come before us is SE 12, an additional appropriation from the Law Department for the settlement of a claim, Sanders versus Town of Greenwich. The Budget Committee met last week, and I so move. Mr. Chairman, at this point, if we could get a word from the town attorney on this matter.
Good evening.
Good evening.
This is a personal injury action arising out of plaintiff's fall on a patch of ice on a town sidewalk outside a parking lot in downtown Greenwich. It's a case brought under the Highway Defect Statute, which includes sidewalks and premises liability. Plaintiff's medical expenses are in excess of $160,000. She has permanent partial disability of the hip. We recommend that the town should contribute its $500,000 self-insured retention towards a possible settlement. This has been before the Law Committee and has indicated also before your Budget Committee.
Just a brief discussion on this point, Mr. Chairman. We will be taking these three items up separately as they're three separate items, but just to make sure everybody is aware that these are non-routine litigation settlements. They were approved by the Law Committee of the BET at its December 7th, 2007 meeting, 2-0 vote, and the Budget Committee also had a lengthy discussion of these items in executive session at its December 11th meeting, which was attended by most BET members. The Budget Committee did approve not only this settlement, but the other two that are also going to come before us tonight of a vote of 4-0. And the town attorney just referenced SE 12, which was the first one on the agenda.
So we have a motion on the floor. Is there a second? Okay, Mr. Mason. Any discussion? All in favor? Aye. Any opposition? Unanimous. Thank you. Mr. Walker?
The next item before us is SE 13, $50,000 additional appropriation, Camiglio versus Town of Greenwich. I'd ask the town attorney to, again, talk about this item.
He'd like to be first selectman, but not yet. Good evening again. This is an action seeking unpaid wages and double damages plus attorney's fees pursuant to the Connecticut statutes, or alternatively, a case of unjust enrichment. The plaintiff's claim arises out of service as an island caretaker in a dispute over the hours actually worked. Outside counsel and our office concurs the case can be settled for $50,000.
Mr. Walker?
I so move.
Second by Mr. Mason. Any discussion? All in favor? Aye. Any opposition? Unanimous. Mr. Walker?
The last item is SE 14, $500,000 additional appropriation, Romig versus Town of Greenwich. I would just note that the BET, the Budget Committee, and the Law Committee take these items very seriously, but we're asking the town attorney to address these items, as many of the discussions occurred during executive session. So on this one, we'd ask the town attorney also to come forward, if he would, and address this item as well.
This is a wrongful death action arising out of a fire in a residential building. It's the town's position that its action fighting the fire protected by municipal immunity. There have been numerous pretrial proceedings and mediation. Outside counsel has recommended, and we concur, that the town should contribute $500,000 towards a possible settlement.
I so move.
Do you have a second?
Second.
Any discussion? All in favor? Aye. Any opposition? Unanimous? Thank you. We have a request from the Retirement Board to take an item out of order, an item that was under new business before, in order to not inconvenience some outside consultants to the Retirement Board, and that is the presentation concerning private equity investments.
So moved.
Do we have a second?
I'll second.
Any discussion?
The only concern that I have is if our assessor has any other appointment that he needs to make.
Thank you very much. Ed. All in favor on this movement?
Aye.
Any opposition? Unanimous, okay. Mr. Lavin, do you want to introduce the consultants, please?
Yes, I would be happy. This is you may be aware of the fact that we've had New England pension consultants out of Cambridge, Mass. for 4 or 5 years now, and this is one of their partners, Doug Mosley.
Thank you very much. Mr. Mosley, welcome.
Thank you. The Retirement Board asked me to just present a quick summary of some recent activity and recent board vote in the private equity allocation space. The board currently has a 5% target to the private equity space with 2 individual investments with individual private equity partnerships. Our firm has recommended as a way to further fund the existing policy target allocation and also a way to further diversify that the board consider investing in private equity fund of funds, which are essentially funds created by one manager that invest in a group of managers between 30 and 50 underlying partnerships. It's a way to get broad exposure to private equity, to mitigate concentration risk with 1 or 2 managers, and also get access as a medium-sized public pension fund to top-tier private equity firms that normally would not take commitments, say for under $50 million to individual partnerships. And so we've recommended that the board consider a group of funds. We presented a group of, I believe it was 8 different candidates for consideration. The board interviewed 3 and selected 2 firms to allocate $5 million each to. And just as a background in the private equity space, when you make a commitment of say $5 million, that's something that is drawn down over a period of time with the capital invested over, say, a 3-year cycle. And then you have a return of capital over a 6 to 8 year cycle. For the average cycle for private equity to be about 10 years. Just by way of other updates on the retirement board, through November, the fund was up 8.4% year to date, and that's after a very difficult November. I think most of you are aware that the equity markets and the bond markets have been pretty volatile since the middle of the summer. They are ahead of the policy target right now. The policy index has returned 7.1%. And the value of the fund is now just over $351 million at the end of November. And I believe we did submit some more information on the private equity managers, a summary that hopefully you have or we can make available to you that summarizes the 2 firms that were selected, AIG and a firm called Quellos, which is now owned by BlackRock, so they're called BlackRock Quellos. Any other questions or concerns?
Could you just summarize briefly what it is that's reflected on those particular outlines? Maybe a little bit about each general partner.
Sure,
Right.
sure. The outline is summarizes the 2 funds that we're recommending, and the board has voted to commit to. In the case of AIG, they are raising a $750 million private equity fund of funds. This is their 5th fund of funds offering. They will invest in approximately 50 partnerships, which will be partnerships they've committed to themselves in about a 3-year window, starting last year in 2006. Funds they've committed to this year in 2007, and then funds that will continue to commit to into next year. It's a 10-year life. The AIG private equity team is based in New York City, and AIG themselves commit a significant amount of money to this space, both through what they call the warehousing facility, which is the money that AIG puts up in front to allow them to make the commitments in advance of capital commitments from limited partners like the town of Greenwich. But also they have on their own balance sheet a significant investment in private equity that exceeds several $billion over time. Quellos is a firm that was just recently bought by BlackRock. They are a firm that has, in addition to private equity, they also offer real estate and hedge fund products. They have offices in New York, North Carolina, and Seattle. The North Carolina team is actually the old Duke University, some of the alternative asset team there that had split out and started their own firm several years ago. And Quellos essentially brought them on board. They're raising a $600 million fund. Again, it will spread out commitments in funds that are what we call vintage year 06, 07, and into 08. This will actually be a 12-year life fund. And they are the partners, or the investment professionals running the fund do also commit money of their own to the fund, so they're investing alongside the retirement system and the other limited partners.
Any questions? Mr. Simon?
A couple of questions.
Sure.
You said that the retirement board wants to invest 5% of its assets in what kind of investments?
In private equity as an asset class.
And
category.
are these the first two investments in that group?
These would be the second and third investments in that group.
And the first one was?
The first one was Gilbert Global Equity Limited Partnership that Frank Russell had brought to you.
All right.
And the second one was Welsh, Carson, Anderson, and Stowe Capital Partners 4.
So we still have more money that we can invest later on, because the Gilbert Global is now $2 million of the total. So this brings us up to 12.
Yeah, and the capital in this fund of funds will be drawn down relatively quickly because both funds had pre-committed and done the warehousing that I explained. But in the private equity space, if you want to invest 5% and say that number is $15 million, if you had a $300 million fund, you would typically commit about 2 times that, because the way the cycle works, I mentioned the drawing down of capital. Frequently, you're getting capital back at the same time they are drawing the rest of your commitment. And so in order to get $15 million out the door and invested and returning, providing that return that we're looking for, we typically will have to invest 2 times that amount and spread it out over, again, multiple funds and then multiple vintage years.
Right. When you looked at these two firms and the number of funds they were investing in, was there significant or any overlap?
There is some overlap, yes. We did look for firms that we thought would be complementary, but in some cases, for example, both funds are investing in the different areas of private equity, including buyout, which a lot of us will read about in the paper, large buyout firms like Bain Capital, Blackstone, those type of firms.
Are they buying the exact same fund?
In some cases, they can be buying the exact same fund, yes.
And another consideration of the retirement board, which I thought was important, was that these funds, these companies, AIG and BlackRock, were a substantial financial position, so that if the funds had problems, they could help.
You mean their own funds, the fund of funds, or the underlying funds they're investing in?
I would say there was one comment made that I think should be clarified, that we didn't consider one other person who wanted to offer us a fund of funds because they didn't have sufficient capital as an organization. And what role that plays in the board making a decision as to who to choose to invest with as a fund-to-fund manager.
Yeah, I think from the standpoint of wanting to see capital, I'd put it in a couple categories. One, we want to see that they're investing alongside us with their own money. So, someone who's the principal, who's the key decision maker in this product, maybe it's someone that makes a significant amount of money in salary, and then they get part of the carried interest of the fund. We want to see that they're writing a check out of their own pockets for, say $500,000 or $1 million to put money into the same fund that we're investing in. The second way that capital becomes important is in that warehousing that I talked about, which is they can't sign documents to commit to funds back, 6 or 8, 10 months ago without having a credit line that essentially backs that commitment. And if they're still lining up their investors, they want to be able to manage the process efficiently, and to do that, they have to have their own capital, both to commit to the fund, but also through a credit line. And then I think, then you can look at the overall general desire to have firms you do business with have adequate capital to manage their business. And I guess that'd be the third category that we'd say was important.
And my last question is, what has the historical return of these fund-of-funds been?
The historical return of the private equity fund of funds, depending on what vintage year group you look at, has been, and our expectation is that from a private equity return, because we are locking up our money, we expect to get a much higher return than traditional domestic liquid equities. So it would be in the high teens, say 15 to 20%, and that would be net of fees. Again, one of the big advantages we see with the fund of funds is they're going to get us access to managers that we can't get you direct access to, setting aside the fact that the town of Greenwich has a lot of cachet in its name, certainly. It would be hard to get access to a lot of the funds that these funds are investing in because we can't commit more than $5 or $10 million to one fund, whereas they, the top tier managers are looking for investors that are bringing at least $50 million to the table. sometimes more than that.
Thank you.
Any other? Mr. Norton?
Yes, the question I have involves minimums. Do these fund of funds have minimum requirements, and if so, what are they for each of these two?
The minimum investment in each of these funds, I believe, is $5 million. Typically, because we are, as a firm, researching these group of products and also bringing groups of investors to the table, if we have a smaller client, say a public pension fund with $100 million, and they only wanted to commit $2 or $3 million, we can usually arrange that. But in general, these funds want to have at least $5 or $10 million coming from each of their investors.
So each of these funds has a $5 million minimum fund?
I believe they're both $5 million minimums. I can double check that for you. I don't know exactly off the top of my head.
Isn't that the amount that we're contributing to each one of them?
You're doing $5 million to each, actually, and looking at one of the other pages, AIG actually lists a minimum of $10 million, but it's subject to a waiver on their part, which they granted us for this.
Thank you.
Thank you very much for your
Mr.
time.
Mosley,
Oh,
just a
sorry.
couple of things, since nobody else asked. You touched on before the categories, the targets of each of these funds, and maybe dividing it among takeovers and VC and turnarounds. Can you just roughly outline what each one is expected to be invested in?
Sure, that's very straightforward. I'll start with BlackRock Quellos. They have targeted approximately 30% to the venture category, 40% to buyouts, and that could include large buyout firms like, again, Bain Capital, T.H. Lee, Blackstone, but also mid-market buyout firms, which would be firms that focus on much smaller size companies or middle-sized companies. And then 30% to special situations, which is kind of a catch-all category that it can include a lot of different strategies depending on who you're asking the question of. We separate out distress as a separate category, but a lot of times distressed investment is in that category. The secondaries, co-investments where they invest alongside a manager in one specific investment that manager is making. Those types of things sometimes fall in the special situations categories, but it essentially is a catch-all for other types of strategies. AIG is investing a little bit less in venture, 20% in venture, 45% in buyouts, and then they've targeted the rest of their portfolio to be 10% in secondary investments, and secondaries are when a manager like AIG looks for other investors that want to sell pools of private equity partnerships that are already established and, say, 3 to 5 years into their life. So, for example, a lot of the big investment banks in New York will use seed money. They'll make seed investments in private equity partnerships, and they only do that to generate investment banking business. And once they get through the investment cycle on those funds, they know those aren't going to generate business, so they'll sell off that asset because they have capital requirements on their balance sheet that limit the amount of money they can have committed to private equity. So they'll wholesale move groups of 10, 20, 30, 40 partnerships off their balance sheet by selling them to other investors who want to bring capital and, say, buy into a partnership at 90, 95 cents on the dollar, sometimes at par, depending on the attractiveness. The benefit of that type of strategy is that you avoid the higher fees, the fee load that is paid in the first, say, 3 or 4 years on committed capital, and you move into a situation where you can buy a portfolio that's already invested and you have some information on what that portfolio makeup looks like. And then the co-investments I mentioned are when that's the remainder of AIG. That's when, again, one of their underlying partnerships, say, for example, they're investing in Bain Capital, and Bain Capital identifies an investment opportunity that will cost, say, $10 billion to invest in, and Bain Capital decides they only want to put up $5 billion. They can go to their investors and say, would you like to put up some portion of the rest of the money? Or they can obviously go to other buyout funds to do that. And so those are individual deals that are brought to a firm like AIG for review and complement the fund strategies that they're investing in.
Okay. And then finally, while past experience is no guarantee about the future.
Yes.
I've heard that somewhere.
Yes.
That's another disclaimer, Mr. Kromek.
Is this on behalf of all of us?
No, that's on behalf of the sponsoring general partners, we hope. What's been the track record of these two general partner sponsors?
Both of these firms in their prior fund of funds, Quellos has 2 prior funds, AIG has 4, have been able to deliver returns that are anywhere between 14 and over 20%. Over, again, different periods of time. So some of those funds are maybe only 3 or 4 years old. Some of them are 6 or 8 years old. So there's varying degrees of visibility on how long the record is. But
Has there been a cratering of any of the partnerships?
there hasn't been a cratering of any of these partnerships, but I think maybe in the spirit of the question, there's a lot of question about the private equity market and different parts of it, in particular large buyout, whether or not there'll be a cratering of returns in that category. And I think it's fair to say both of the managers are aware of that and are taking steps to address how they can sidestep some of that. In particular, one of the things I didn't mention is that both of these funds will have some of their buyout or venture exposure overseas. So they're going overseas for opportunities where the marketplace is a little bit different than here.
Okay, good. Thank you. Any other questions, comments? Thank you very much, Mr. Moses.
Thank you very much for your time.
Thank you. So I believe we have a request by the Retirement Board for, I guess, an agreement in principle to move forward.
That's exactly right. As you can imagine, the documents are this high, and before we give them to the town's law department, we want to make sure that the board wishes that they, tell us that there would be some understanding of agreement when they were actually presented to you at a future date.
Will somebody make such a motion, Mr. Simon?
Yes, I would move that the board approve in principle the investment both in the two private equity funds and this type of, in the two private equity funds or two private equity investments so described.
Do we have a second? Mr. Norton? Okay. Any discussion? All in favor? Mr. Walko?
Just a question on timing. So if we agree to this in principle, those contracts are approved by the BET?
Right now, they would be first going for legal review,
Right?
and then when they are in proper legal order, they would be returned here for another review. And at that point in time, because of timing, we would hope that it would be expeditious.
So when do you expect those contracts?
Well, I would hope that we'd be back in February.
Okay.
Mr. Crumick?
No, I just, I understand that. So what we're doing today is kind of a resolution that gives you some comfort that we agree with the approach, and then we'll specifically vote on these contracts when they come back in February.
Yeah, that's correct, and we thought to communicate this approach would be beneficial to everybody.
Right. Okay. There are no further comments or questions. All in favor? Aye. Any opposition? Fine, it's unanimous. Thank you very much. Thank you. Mr. Gortney, thank you very much for being patient and waiting. Town Assessor, thank you.
Okay. Good evening, Mr. Chairman and members of the board. You have my report, and I'm prepared this evening to answer any questions about it.
Mr. Finger?
Mr. Bortney, under the section headed Report 1, Data Processing Issues, I'd like you, if you would, explain a little bit more about the Parcel Analyst Program failing to perform as promised. Was that a program that was specifically purchased for this purpose, or was it an adaptation of an existing program?
It's prepared by a company that writes specialist programs for using GIS facilities, and we had seen some demonstrations that led us to believe that we would be able to make massive changes to our database very simply by touching on GIS map positions. As it turns out, the software did not allow the interface that we expected with our ProVal, between the GIS and the ProVal. So instead, we're working on our own system that will do exactly what we want. And the system, while it has value, did not do the function that we wanted to move the characteristics into the ProVal system.
Are you able to use this system for other aspects of what you do, or is it just something we purchased and no longer can use at all?
It can be used for other aspects of our work.
And will you be utilizing it for those other aspects of your work?
We'll be trying to use it in certain aspects of the work that we do, yes.
Give me an idea of how much we spent on this?
Approximately 9,000.
Thank you.
Mr. Kremick?
Ted, I noticed you report that there's going to be an increase, or there has been an increase in the grand list as of October 1, 2007, of $453 million. How does that compare to projections, the ones we used in putting the budget together?
It's higher than the projected amount. I don't remember the exact amount, but I'm guessing that it's maybe 5 to 10% greater.
The number is 1.36%, and we projected 1.35%.
So it's only
Hundredth of
1/100th of 1%. Okay. This does not include the personal property or the motor vehicle, but we don't anticipate a large increase in those two areas.
Any other questions? We have a motion to accept the assessors report. A second? Mr. Mason, all in favor?
Aye.
Any opposition? Unanimous. Thank you very much. Committee and liaison reports. Let me jump in first with the Audit Committee. I'll wear that hat for a second. Audit Committee on the 13th of December reviewed and unanimously approved the resolution concerning engaging professionals to represent the town's interests in certain construction projects that will be taken up under old business this evening. We discussed the draft management letter received from Blum Shapiro relating to their audit of the town's financials for the fiscal year ending June 30th, 2007, as well as expected responses thereto from various departments. Observations concerning Board of Education, MyANA software system, and personnel files were discussed. It appeared to the committee that most are in the process of being dealt with. That concerning payroll records is subject to further discussion and assessment. We continued our review, started in November, of the internal audit of the waste disposal and recycling operation at Holly Hill. We had with us Commissioner Hubbs, as well as several staff officials who were directly involved in the operations. Town administrator was also in attendance. The Commissioner agreed with the findings and seemed to be in accord with taking an action in several areas requiring immediate attention. These include, but not limited to, focusing on mixed solid waste originating from outside of Greenwich, which apparently represents a cost to the town of well into six figures annually. The committee approved release and distribution of the report, and I highly recommend you review it. Finally, we reviewed the summary reflecting terms of leases and operating agreements covering town-owned real property. This continues to be a work in progress, the development of which is revealed to the auditor, the internal auditor, that record-keeping of various leases and required collateral documentation related thereto seems inadequate. We recommend to the to-be-formed Audit Committee that it follow up on this matter. I'm going to segue into the Retirement Board, just because for the moment I have the floor. Retirement Board in November and then earlier this evening approved adoption of investment management guidelines, which were somewhat along the lines of those suggested to it when the current year's budget was conditioned because of the absence of those guidelines. Coincidental with the evidence of need for more attention being given to the subject area. Earlier this evening, that board took action on what was basically a deficiency in the guidelines, and we've approved elimination of the condition this evening. That board also interviewed 3 sponsors of private equity limited partnerships, took action to invest in 2 at commitment levels of up to $5 million each. They've made a presentation to our board tonight, and we have unanimously approved their moving forward. That concludes my report. Next would.
Yes, thank you, Mr. Chairman.
The Human Resources Committee met December 12th with all members, Mr. Minarski and Ms. Cass present. First Selectman Peter Tessie attended also. Ms. Cass provided a brief update on the MC pay plan in terms of that time frame, and commented that the Board of Education had completed several of their MC employees' questionnaires for their inclusion in the study. In other words, they had agreed to participate in the study, and they were providing their employees information so that Hay could proceed with their work. She also confirmed her submission of the Human Resources training budget as outlined in our meeting in November. Mr. Tessie was welcomed and joined in the discussion on the HR schedules, including the vacancy report. The committee began its discussion of the proposed risk management topic. Nancy Barton had prepared the discussion outline. The objective is to define the topic where the mitigants include human resource solutions, such as policies and training. Thank you. Shall I proceed with the MC pay plan?
Please.
The MC Pay Plan Subcommittee has met 2 times in the last week with the Hay Group and, of course, Ms. Cast. The meeting last week was to discuss job classification and pay compensation. Hay compared the town of Greenwich's non-represented pay practices to the pay levels for jobs of similar size and/or function in the general market, which included metropolitan New York private sector, public sector, insurance companies, and not-for-profits. Also, a special survey of 5 selected municipalities conducted by Hay, and these were all towns and cities that the committee had selected, with the exception of Stamford, which had not submitted the data requested, and a survey of nursing home positions conducted by CAMPA, which is the Connecticut's not-for-profit organization for nursing homes. The meeting today was to discuss the town's MC benefit package and to compare it with other government entities in the Hay database. In general, the town, Greenwich, compared favorably in that particular, it's a preliminary study at this point. The subcommittee will work with Ms. Cast to provide her feedback on both presentations. Ms. Cast expects the Hay Group and the subcommittee will begin to finalize the information in early and mid-January. Thank you.
Ms. Tarkin, do you want to continue on with anything you might have to say on the Witherall Building Committee?
Mr. Chairman, I thought we had said we might do that together with the resolution later, or what would you like to do?
If there's anything outside of that particular reference to the resolution.
No, there isn't. Not this month. Thank you.
Okay, fine. Thank you. Mr. Walco, do you want to talk about OPEB and possibly Ham Ave as well?
Sure.
Right.
So the OPEB trust document was approved by the RTM. I think there were only 3 or so negative votes. We will need to reconstitute the OPEB ad hoc committee at the next term to not only help in determining the board of OPEB, but then also through the investment advisory committee to then also discuss investment allocations. So we look forward to continuing that committee in its reconstituted form in January, moving forward on that. We're very pleased, obviously, by the results of the RTM meeting and all the work that went in by the committees of the RTM. The Ham Ave Building Committee, we will expect an interim appropriation to be requested by the Ham Ave Building Committee of $550,000 or thereabouts. In January, the schedule is tight. The key component of this request is really project management. It has less to do with actual overruns of the construction other than project management and the time delay factor. Because of the timing delay in getting it to us, the Ham Ave Building Committee would also like the RTM to vote on this in January. And at the appropriate time, Mr. Chairman, I would be moving that we agree to a special meeting of the BET on January 14th at 6:30 to meet, which would be an hour and a half prior to the RTM vote on this item that same evening. And if now is the appropriate time, I so move.
And we have a second? Second. Any discussion?
Just to, obviously, we're, in my estimation, taking up this item at the last possible minute is important. One of the critical one of the critical aspects of this project currently is whether or not we obtain temporary heat. As every week goes by, one hopes that that temporary heat will be on, and we can make a better decision relative to this requested appropriation. And therefore, this is the last possible time we would be able to meet prior to the RTM meeting on that same evening.
Further discussion on the motion?
The motion is to add the item to the agenda?
The motion is it's coming out of a committee report to put it on for a new meeting on the 14th. I'm not sure it needs to be on as an agenda item if it's coming out of a committee report, but if we want to do it that way, that's
We can
fine
go through
too.
that if you need to.
Formality, that's
I
fine.
think you should vote to add it to the agenda.
Okay.
And then vote on the item.
Okay, do we have a motion to add?
So moved.
Okay, do we have a second?
Second.
Okay, any discussion? All in favor?
Aye.
Any opposition? Unanimous.
I'm now moved that we add January 14th,
Monday, right?
Monday, January 14th at 6:30 in Town Hall somewhere yet to be determined, preferably this room, to take up one item, and that item being the request by the anticipated request by the Hamad Building Committee.
Do we have a second?
Second.
Second. Any discussion?
Mr. Chair, just, this is going to the RTM on the evening of the 14th. I believe the cutoff is December 28th.
Right.
Is there anything that Finance needs to do as far as materials that have to go to the RTM and presentations to the subcommittees in the week preceding?
I think that's in the bailiwick of the Building Committee. You might want to just touch base with Frank about that.
The building committee under Frank Mazza will submit that with the notation pending approval by the BET.
Okay, thanks.
We'll be prepared to make a statement on the floor of the RTM that evening.
Okay. Thank you, Mr. Marsky. Any further discussion? Questions, Mr. Norton? No. Yes, Mr. Mason?
No, Mr. Himes has his hands up.
Mr. Himes?
Just for clarity, this meeting would be attended by the then newly sworn BET, correct?
Correct. But you're welcome.
I'm abstaining.
Not from this vote, I hope, though. Okay. There's no further discussion. All in favor?
Aye.
Aye. Any opposition? Good. Unanimous. Thank you. Mr. Welcome?
I'm done.
Okay. Mr. Norton, concerning investment advisory?
Okay, the investment committee met on December 6th. Jim Campbell and I, we met with the controller, Peter Minorski, and the treasurer, Kathleen Murphy. We were also joined by
Jim Himes.
Who did I say? Jim Himes, I'm sorry. Jim Himes and I, as the
Quickly, don't forget.
investment committee, met with the controller and the town treasurer, and we were joined by Leslie Talkington. The meeting of that committee concerned one item, and that was our contributions of the monies we're currently holding in the short-term investment fund of the state of Connecticut, STIF as it's known, and the balances that were shown on both October 30th and it's October 31 and November 30th. And the instructions in our meeting at that time were that the STIF fund be, by December 31, the contributions in both the STIF fund and the MBIA be reduced to amounts of money which would be necessary to maintain the accounts. It's my understanding that there is one account and there are 10 sub-accounts, so that we would keep small balances in each one of those to be able to maintain the account, so that when the existing problem, which is affecting the STIF account, which is the secured investment vehicles, or SIVs as they're commonly known, has been abated and virtually eliminated, and we can go back and make use of the STIF investment fund. And that was the whole thrust of our meeting. I don't know if, Jim, you want to make any additions to that. I think further, when we come to the treasurer's report, there will be additional materials, because we've all been distributed this evening a 3-page document prepared by the treasurer's office in regard to the STIF fund distribution dated 12/17/07.
Any questions, further comments on this? Are there any other reports, liaison, committee, or otherwise? Thank you. Mr. Minorski, controller's reports?
Good evening, Mr. Chairman, BET members. You all have a copy of my controller's report, and I will answer any questions you might have at this time.
Mr. Walco?
Mr. Winarski, maybe you could just go through a little bit about the procedure for North Miami Sewer Project. We seem to have gotten over the initial hurdle that we were having trouble with a couple of months ago. Is that correct?
The Condemnation Commission met on December 10th and 12th, and there's still a couple of outstanding issues, and if they're resolved by Wednesday, the schedule that follows below it, as far as filing with the town clerk, proposed public hearings, and the final apportionments, so the listings, et cetera, checking of the addresses, we should be able to have a April 1st billing date.
And the effect of that change from the January 1st billing date to the April 1st is increased in interest that will be borne then by the Seward area?
We're accruing the interest monthly, correct, yes.
Are you confident that we're going to hit the April 1st payment date?
Not entirely confident, but I would say probably 100%, no later than May 1st. 99%.
Hedging.
Thank you.
Any other questions, comments?
Well,
Simon?
I have questions on the second page of the treasurer's report about where we're
Well,
going
we
to
haven't
do
moved
future.
into that yet.
And
Why don't
that's,
we will.
so we'll wait till we get to that part?
Correct. Any other questions concerning the controller's report? Okay. Do we have a motion to accept the controller's report?
So
Mr.
moved.
Norton? Second?
Second.
Any further discussion? All in favor? Any opposition? Unanimous. Thank you. Now the treasurer's report. Mr. Minorski, maybe you just be there for any questions concerning that? We have before us the treasurer's report. Any questions concerning that? Mr. Simon?
So, Mike, I'll wait till Mr. Minarski returns. So what is, on page 2, where it says Town of Greenwich Alternative Investment Options on your December 17th memo, what would be the maximum you would put in any of these banks?
The standing investment policy that goes back a number of years is, other than STIF, 25%. One of the
5% of what?
of the existing balances. For example, if you had $100 million for the month of January 31st, it would be $25 million. With the exception of STIF, they've allowed for STIF to exceed the 25 million. The 25% threshold.
And do you think there's an advantage to us to have 4 accounts versus 8 accounts?
The advantage is it's more competitive. We could, each one offers...
Which one's more competitive?
It depends. They offer different rates at different times. If you're looking at the December 17th report prepared by the treasurer this afternoon, you can see, for example, TD North Bank, and these are all net of fees, 4.6%. The U.S. Trust, the government fund, which is basically treasuries, is 4.42%.
And what time period are those? Except for like money held for 30 days, 1 day?
They're liquid.
That's like
They're similar.
1 day.
They're similar to the STIF fund. They do have longer maturities, but we can get the money not at I guess yes, you can get it the same day as STIF as long as you call before 11 o'clock in the morning, but they are liquid.
I guess my question is, we're soon going to have $100 million to invest, and small differences in earnings make a big difference to the town, and going out, and we don't need $130 million on day one, and I don't know what the state statute limitations are on how far out we can go, whether we can buy money for 30 days, 60 days, 90 days.
We have existing investment policies on the different funds, the general fund, the reserve fund, which was the OPEB fund, which will change, and there are limitations with the general fund. This deals more so with the general fund as opposed to the other funds. And we're restricted to go, for example, no longer than 18-month maturity with an average of 12 months, as an example of one of the investment policies. But we're not going to be going out longer than that.
I'll ask the question differently. Who makes the decision in January and the end of December when we get all this money in as to what banks and what length of maturities we're going to invest in?
The two answers. The investment committee will give us guidance as to which ones are allowable, and the treasurer will make the decision as to where the money goes. As far as
They're allowable being which banks?
which options are allowable to invest in.
When is this? They're going to give you, this is good. I don't know that the investment committee can authorize the board to do anything. The board
No.
can authorize you, unless we've already done this authorization.
What we're going to do is there is an existing investment policy on the different funds, and there is also in the resolution which was passed by the BET in the summer of '05, there are the banks that we can invest in, or the financial institutions we can invest in the different products. We're going to bring that forward and ask for the BET to pass in another resolution as to what all the options are. That would be the guidance, and then the treasurer would decide, based on phone calls and what the rates are, where the money will go.
And you think this will happen in January?
It's happening right now as far as preparing the investment policy and the resolution. It'll come to the BET at the first to the next investment committee meeting, and it will be presented to the BET in the form of a resolution.
At our January 22nd meeting.
Yes.
Okay, Mr. Norton?
When the investment committee met on the 6th of December, we instructed the comptroller and the treasurer to seek additional accounts so that in effect what we have here are 6 accounts in which we would be able to put the money in. These rates are day rates. These rates change on a daily basis. So the rates that you see, I believe, are the rates that we were able to determine this morning for each one of the 6 accounts, the TD North account, the U.S. Trust General Fund account. And as it indicates up above, these are only investing in U.S. Treasuries, government agencies, and repos. Actually, repos should be added to that. And that was our instruction going forward, is the type of investment that we wanted for the monies, which has begun to flow into the town treasury with people prepaying their second half tax payments. So the money has already begun to flow, and the treasurer with the controller has to make a decision as to how to allocate the money into these various accounts. And it's my understanding that each one of the 4 accounts, the J.P. Morgan, Chase, the UBS, the BlackRock, and the Vanguard, have all been established.
That's correct. As Art said, the tax receipts are starting to come in. We collected over $1.3 million just today and $500,000 last Friday. We have the STIF account at the recommendation of the investment committee. We're drawing down. So as we speak, we have to look at these different options, and we have to find out where the money has to go starting now.
Okay. Any further questions, comments? Mr. Krummick?
I just throw this out there. Has any consideration been given to hiring some kind of an investment manager so that the control of funds going into these revenues going into these funds is controlled by a professional rather than relying on the investment advisory committee of this board and the controller and the treasurer to make that determination?
The question is have we looked at hiring a consultant?
Are you considering it?
No. I believe that...
Would you consider it?
I believe that the treasurer that was hired is more than qualified than anyone would find out there. And you have to remember that we're restricted by state statute as to where we could put money. So because of the restrictions by state statute and the guidelines that have been set up by the BET, I don't feel that we would need an outside consultant.
Right.
Well, clearly, the current treasurer has much different experience than the other treasurers we've had in the past. So she's a very competent person. And that may be. I mean, it may very well be. But you are talking about... So we're relying basically then on the treasurer, not on the BET Investment Advisory Committee to make these kind of decisions, particularly with respect to rates that change on a daily basis.
again, you're relying on state statutes. They're restricted as to where you could put the money and the guidelines that have already been established by the BET.
To put a finer point on that, the investment committee and finally our board establishes limits for eligible depositories. I'm a little surprised that we establish a limit based on percent of liquid funds that are available rather than looking at least in theory, at each depository and saying we'll put up to so much in picking an institution, J.P. Morgan Chase, which is maybe looking at it differently than saying 25% of our funds can go in a Chase, which isn't normally the way a depositor should be looking at it. But anyway, once that limit has been established for a depository and the group of depositories, it's then the task of the treasurer to invest funds the way that professional sees fit, based on the expected requirement for cash. Is that right?
Yes, yes.
Thank you. Okay. Any other questions? Mr. Hines.
I just observe, following up on Ed's question, as a member of the investment committee, the cash management of the town is actually a fairly complicated thing. You've got turnover, in certain accounts, turnovers of 30 days, in certain accounts, a matter of years. And so it's a fairly complicated problem, and not that we should necessarily put a lot more work on the comptroller or the treasurer, but it's an interesting idea. Were you to have somebody look at those different maturities, if you will, and the inflow and outflow of cash, you probably could optimize it in a way that is well beyond, it's a highly quantitative exercise. You could probably optimize the cash earnings of the town certainly better than at least this half of the investment committee could ever do. So it's something I think worth at least thinking about, because it is a fairly complicated problem, and to date I think we've done it in a responsible fashion, but not in a way that would necessarily optimize the yield across all these many accounts.
Okay.
Good comment, right? Mr. Norton?
Yeah, I'd like to follow up on that. There are a couple of issues I think here. Number one, we depend upon the income that's generated in these various accounts to, in effect, to balance our books. And if we're going to add another expense, which an investment manager would, as a professional investment manager, I mean, we don't come free. So that there would be an expense, and it could reduce our return on these as much as 100 basis points because it is a small, somewhere between 1% and 5% of the actual return. And where we're having a declining rates of return, if you look at the current rates are somewhere ranging between actually 4.2, I believe, and 4.6. Actually, the form we have with Vanguard, I believe it's actual 4.4%. The Vanguard, late this afternoon, that was established. So that I think if we're going to go forward with an investment advisor, investment manager, we have to very seriously consider the cost involved in that function.
Thank you.
Okay, then, in response to Mr. Cromick's question, then we will look at the possibility of retaining some type of cash management skills and report back to the BET.
Well, just to refer to Art's comment, observation, I think it's correct. I mean, clearly, nobody does this for free. Theoretically, though, having professional management gives you a higher rate of return. And obviously, if you're not getting a net profit out of it, then you're not going to do it. But it just seemed to me that it's something that we should consider. We've gone beyond really the level, I think, of volunteer oversight by the by our investment advisory committee, and really getting into some pretty substantial numbers here, and volatility that perhaps a professional manager could help us with.
Okay, agreed then.
Okay. Any other comments? If not, I'll take a motion to accept the treasurer's report. Mr. Norton. Second by Mr. Mason. Any further discussion? All in favor? Aye. Any opposition? Unanimous. Thank you. Next item is officers' reports. Yes, approval of minutes. Thank you.
So moved.
Motion for acceptance of the minutes of the regular meeting of November 19th, 2007. Mr. Walko is moved. Do we have a second? Any discussion? Mr. Simon. Any discussion? All in favor?
Aye.
Any opposition? Unanimous? Thank you.
I abstain.
Mr.
I
Okay.
abstain,
Okay.
except for the last 3 pages.
Okay.
Yeah, time is
Okay.
up, too.
Okay.
Mr. Campbell abstained.
Okay.
Mr. Chairman, I should abstain.
Okay. Officers' reports. I just have a reminder to my colleagues who've been on the board that we still need their submissions for evaluations on the controller and the assessor for the year-end performance reviews. Hopefully, we can get these in no later than the end of the week. Copies to me and Marine Cast, please. Thank you very much. Ms. Rutgers, any report?
Well, this is my last meeting as clerk, so I just want to say that I've enjoyed being the clerk for the past 4 years, and I still have one more set of minutes to get to you, even when I'm no longer here. And also, I am going to put together a written job description for whoever the next clerk is, outlining all the procedures and the time frame and so on that we use. So I just wanted to say that would be forthcoming
That would be very
as
helpful.
well. And
Right.
thank you.
Thank you very much. And we will miss you and your work.
And I'll miss you too, but I don't know if I'll miss the minutes that much.
Okay.
So you didn't really enjoy being there.
40
new-
years is in
We have a resolution before us this evening concerning construction projects relating to town, school, and Town of Greenwich-related construction projects. Mr. Simon, do you want to present that?
Yes, everyone on the board has a copy of this resolution, and I so move it.
We have a second.
Second.
Mr. Walko, any discussion? Mr. Finger?
Just have first a question. Would this resolution only bind this board, or will it bind subsequent boards? When I mean this sitting Board of Estimate and Taxation, or will it bind the one that will be seated in January?
Well, it's intended to be adopted by this board, but to have an indeterminate lifespan, certainly going into the next term.
Okay. I do have a question, a comment on item number 1. The last portion of it, I don't see the benefit in setting a threshold of $5 million or any number, any dollar amount as a requirement for the inclusion of an owner's rep or project manager. I think it's sufficient that we say that funds be required for the engagement of a full-time owner's rep or project manager for construction projects of material significance and complexity that might warrant such. Again, there was an article in the paper today that had some comments from members of the Nathaniel Weatherall Board who questioned the necessity. I'm not going to pass judgment whether they should or they shouldn't, but I could see instances where maybe a project manager for a certain project, even though it's in excess of $5 million, might not be a requirement. And I, as one, would be satisfied that as a board, when a project is put forth to us as part of the budget process, we can ask the questions, or the budget committee can ask the questions as to whether there is sufficient funds in that particular project's budget for a project manager. And if there isn't, questions could be asked as to why there is not an item for that. And again, I just think throwing a number, whether it's 5 million, 1 million, 10 million, is not necessary.
Okay, thank you. A comment? Mr. Simon, or
Well, you want to say?
Mr. Walko?
Well, I would say, I tend to agree with you relative to the actual dollar amount requiring this policy to be in effect, although I would say that relative to our current projects, I think it's our role to give as much information relative to this policy as possible, and to put it out there that if the deletion of the last phrase of paragraph 1 is to leave open the door for projects of 5 million or that range would not be sufficiently complex or significant to not warrant a project manager, then I think that deletion would not be productive, because what we're trying to do is telegraph before they even come forward of what our expectation is. If there's ambiguity with respect to that expectation, then I think that's when we run into issues. I would suggest that for projects that are currently in existence that are out there relative to the town, Glenville being one, Nathaniel Witherell being the other, that I think this policy in part is intended to address some of the shortcomings of Hamilton Avenue and to address those two projects. And so I would hate for us to pass this resolution, but then leave this question of whether or not those projects are sufficiently complex or significant to warrant them having to hire project managers. So I'm a little bit conflicted, because I'm not sure that a threshold is the right approach, but I also think that the greater level of clarity should also be in this resolution.
Simon?
I think the issue came up as to whether or not we had a project such as putting in athletic fields at 9 schools that ran to $6 million would then require a project manager. And people could then say, well, this is really 9 different projects. It wasn't of such material complexity, and therefore, in our best judgment, we don't need a project manager, and bring that forth. This doesn't, in my mind, the last part of the sentence is to provide additional clarification and guidance to departments. And if they don't want to budget the project, this doesn't say you must budget this. It does say that we require funds for certain projects, and the BET can disagree with the department and say this project is so complex that we're not going to fund the project unless you provide a project manager and owner's representative, or we agree with you that this is really installing 9 boilers in schools and doesn't require a project manager because it's not that complex. But it gives more guidance to departments than not. And that was the purpose of putting the number in as opposed to omitting the number.
Right.
The way this is written, though, appears to be a requirement that if the project meets the qualifications as set forth in paragraph 1, it is required that the funds be budgeted. And I'm hearing that there would be some discretion on somebody's part not to budget them, and I'm not sure who has that discretion and how it's to be exercised.
Mr. Mason?
Ms. Rogers had her hand up first. I'm sorry, but I'd like to respond to that.
Mr. Rogers?
I had the same concern that Nancy just raised, that the way I read this, it basically tells departments or building committees that they must budget for this, not that there's any discretion involved. And so, and yet we're hearing that there is discretion, and in some ways then this becomes ambiguous, even when Mr. Walko says this makes it clear. I mean, it's what is the balance between clarity and the ambiguity? I think if you just took the dollar amount out, it would not read as the same directive that if it's 5 million or more, you must do this, and then you can come to the budget committee and they will say, you know, maybe you don't have to if you make the proper case. I don't think that, I don't know. The way I first read it, it seemed to me that it was a directive that didn't allow for discretion.
Mr. Mason?
I think the policy is saying exactly what we're saying. We are requiring
a full-time owner representative for projects, and I think we're using 5 million as a threshold. The Board of Ed typically puts roof projects together, boiler replacements together. We have projects going on in town right now that are certainly under 5 million that we don't want a project manager for. I think what we're looking to do is to be very clear that when we get to these significant projects in town, we want owner representation. I think what we're trying to do is go around so we don't break up a project. The skating rink is going to certainly exceed $5 million project over the next year. We've done lighting replacement, we're talking about slab replacement, we're talking about boiler replacement. If they put those together as one project, we need a project manager. The town is choosing, through our funding actions and the first selectman, to do it in stages. So my feeling is, we're setting policy here, we're being clear. Going back to what Mr. Finger was saying, this is binding towards future boards. All of our policies are a continuation until we decide to change them. But I think in looking at what's going on in the town right now, with significant projects coming our way, way over the 5 million threshold, this is exactly what we need. We're getting over a project right now at Hamilton Avenue that didn't have one, and yet we have other huge projects going on in town that did, and they're a lot more, quote, successful. So I'm in favor of, going with this.
Mr. Tarkenton.
Yes, I looked at this as construction projects, not necessarily maintenance projects of replacing a boiler or combining them, I think of those as being maintenance projects, not major construction projects. Quite frankly, my question with this was the full-time owner's representative or project manager, and many of my colleagues know that I thought perhaps a threshold of $10 million was better than $5 million. But when we contemplate the projects that are going on in the town and what's happening, I felt that $5 million at this point in time for this policy probably was a good place to start. And, this is a good starting policy, and maybe a year from now or 2 years from now, the board will be looking to amending or revising the policy. But given the scope and size of our construction projects in town and some of the issues that we're having, I thought that the committee overall worked together well to come up with this language.
Mr. Finger. I think some of the comments that we've heard here create the problems that occurred to me as I read this. Some members of the board said, well, it's sort of setting guidelines, and another member said, well, it's policy. I think we can accomplish the same thing if the language in paragraph 1 was something to the effect that for construction projects of material significance, complexity, et cetera, it is expected that the budget for that project address issues of owner's rep, project manager, as opposed to saying that if you're $5 million, you have to have a line item. If we say they have to address it, as Mr. Walko was indicating, that is telegraphing to these bodies that this is going to be an issue. You have to be prepared to make your case to this board as to, if you choose not to have a project manager, you have to explain to us why you don't think you have to have a project manager. So I think we could accomplish the same thing without having a $5 million or a $1 million or a $10 million threshold. If we want somebody to make the case, I think we put in here, it is expected that you have to address the issue of project manager, owner's rep.
Okay, thank you. Ms. Tarkenton?
I think that creates an ambiguity, what makes it very hard to manage the project because of the way we approve the funds and the appropriations. I think that the first piece is the approval for the upfront 10%. Unless that's made very clear that in that they have to contemplate the construction manager, the project manager or the owner's rep, you've already lost that opportunity because you really have to plan for this person and get this person on board prior to issuing or at the same time as issuing your RFPs for your architect, et cetera. So I think actually what you're proposing makes it much more complex rather than simpler. And, I think the committee has been struggling with this, and I'll say for about 6 months. But overall, I think that based on the discussions and the issues, it's probably a good starting ground, and hence why I voted together with the committee unanimously for this.
Mr. Crumick?
I don't have a problem with this as a guideline, particularly for a guideline for departments coming to the Budget Committee and the BET with a construction project that we're going to expect to see a line item for project manager and larger projects. We're going to expect to see a contingency of at least 5%. But I look at it as a guideline. And the way it's been described as proponents today, it's meant to be a guideline. And so what concerns me a little bit is if this is meant to kind of exercise the dead hand of an expiring BET on future BETs and future BET budget committees, then I think it's not a good idea. If, for one thing, it doesn't provide for discretion of the budget committee to and the BET to waive this. Of course, the BET can change its policies. But as a guideline, I don't have a problem with it. But here's my question to the proponents. What if a future budget committee approves an appropriation without a project manager that's above $5 million? Is that a violation of our policy? I mean, what is that? What is this intended to do? Is it intended to be a guideline? If so, that's fine. If it's intended to bind future budget committees and future BETs until the policy is changed, well, then that may be more problematic.
Mr. Walko?
I think it's intended to be a guideline, just like we set budgetary guidelines every year. And for this, even in this year, where there's going to be a change in term, we set budget guidelines in September that will have an impact on this year's budget, but next term's budget committee will take a look at those guidelines and determine whether or not departments have complied with them and whether or not they're going to accept their budgets either way. I think guidelines are important for our group. They help us recognize what the path that we would like to take unless we change that policy. And certainly there are deviations to that, but it certainly sets the course. And sort of good cause has to be shown to deviate from that. And I think it's even more than an issue for the Budget Committee. Ultimately, the Budget Committee will make a recommendation. It's going to come before the full BET, and I'm sure there'll be a discussion if, in fact, there's a deviation from any policy, this one included, if it passes.
Ms. Martin?
My concern at this point, having listened to the discussion, is that we have approximately 12 opinions on what this resolution does or doesn't say. And I would respectfully suggest that it ought to be rewritten and considered in January.
Well, you might be overstating the number of opinions on this.
Not everyone has spoken. I said approximately 12, but there are a lot of opinions as to whether this is mandatory or not, whether it applies to the department or the BET or not, whether the BET can waive the requirements or not. And I don't think we should pass a resolution as to which there are such interpretations that are in conflict with each other.
Ms. Rutgers?
I would just like to agree with Ms. Barton. There may not be 12 opinions, but there are clearly differences of opinion as to what this is intended to do. The majority of that I'm hearing seem to think it's a guideline, and if that is what it is, then it really does have to be rewritten, because someone reading this for the first time, a building committee, a department, or myself, it didn't sound as if it was just a guideline. And so I think if it could be rewritten to reflect what the majority of the board thinks it is designed to accomplish and be passed by the new board, I don't see any harm in waiting for another month.
Mr. Himes?
Well, speaking as a proponent and a member of the committee that drafted this, I don't think it was ever contemplated to be binding on either the Budget Committee or the BET. I don't think that ever came up in discussion, although I see how in the drafting that might be ambiguous. I think the intention was, and I invite other members of the committee to disagree with me, but the intention really was to create a mechanism whereby perhaps on occasion we would see over-budgeted line items because it would be later determined that an owner's rep wasn't necessary, but that this would at least require that it initially be budgeted for at some tripwire. One way, and I'll offer this as an amendment if there's general assent to clarifying this, one way to make what I think was the original intention of this clear would be, rather than saying in Section 1 there, be budgeted for construction projects, if you simply inserted the word initially before budgeted and by departments afterwards, so that it read be initially budgeted by departments for construction projects. I think that would be clear in what we were expecting departments to do, and it would also implicitly say that the word initially would implicitly acknowledge that it's full discretion on the part of the Budget Committee of the BET to take that initially budgeted item out.
So you're suggesting the word initially be inserted before budgeted, and beyond that?
And then the words by departments after budgeted, in order to make it very clear that this is intended to bind departments on an initial basis, but by no means intended to bind the BET or the Budget Committee.
By departments, and you want to expand that to other sponsors of other projects that are outside of the town of Greenwich? In other words, those related, Board of Ed, for example.
Sure.
Those under building committees?
Yeah, there's probably a more complete way to put it. It's just designed to say that this is really designed to be binding only upon those who initially propose projects to the BET.
Okay. Mr. Walco?
Just a quick comment. This conjures up fond memories of our Policies and Procedures Committee. I'm not sure. I'm not sure that wordsmithing this document tonight is the best approach.
So are you suggesting that we move forward on the present resolution without amendment?
I either say we move forward with it without amending it or refer it back to January.
Okay.
One of the two, whatever the pleasure of the board
And
is.
without trying to interpret what's behind this, just a quick, we're talking about adopting a policy, and I think we're acknowledging tonight that a case, it's not inconceivable. We're not ruling out the possibility that on a case-by-case basis, those that are in opposition to this and are sponsoring a particular project might present a compelling case to have the BET deviate from the policy. But to try and do that without putting the onus for basically making a case without changing the wording that we have right now, which is rather specific, is hard to do. It would make it much fuzzier than it exists right now. So if there's no further comment, Mr. Crumick?
Yeah, I'm sorry, I have just two comments. One is, if you are going to wordsmith, and I think that perhaps this does need a little bit more wordsmithing, and it's inappropriate to do it at this meeting, but I just point out that 2 must be required that said proposed budget, because of course we're not talking about an appropriated budget. If this is intended as a guideline for people proposing a budget, proponents of budget. But that being said, it seems to me that the Budget Committee for this upcoming budget, the budget that's going to be submitted to us, could in effect adopt something like this as a guideline, and if the Budget Committee decides to do that, could say to the departments, to the extent you have proposed a capital project exceeding $5 million, we will expect to see these things in the budget, and if we don't, we want to know why not. So I'm saying that this is actually a good idea, and it's a very thoughtful proposal. I think we're a little bit unclear as to going forward, whether we want it as a guideline, whether we want it as a policy, whether the policy is intended to talk about proposed budgets and not to in any way limit the BET's discretion. But it seems to me that If we do let it go off to be addressed by the other board, in the meantime, the Budget Committee can take a look at this, and at least for this next upcoming budget, can let the departments know, if you're coming to us with a capital project that's going to exceed $5 million, or that has material significance and complexity, then we're going to expect to see these sorts of things. So we can deal with that on a committee level if we decide we're going to take this resolution and work on it a little bit more for a future submission to the new board.
Mr. Finger?
I don't mean to belabor this. I agree with the comment Mr. Walko made before about this is not the place to wordsmith. I just want to make it clear that I support this as guidelines. I think it sets a good framework for a guideline as to what we expect. I just have problems with the language because I think it does more than, or at least gives the impression that it's more than a guideline. And given that, I don't think we would prejudice ourselves or disadvantage the town or any of the budget processes if we go back and ask somebody or all of us try to, give some comments on wordsmithing it between now and our next meeting so that we can have something that all 12 members read it in a similar fashion, and then we could vote on it then. But again, I just want to emphasize, I think it is a good guideline, but needs some work in the language.
Okay.
Mr. Chairman.
Okay, Mr. Walko?
So maybe the right approach on this, and I think it's been moved, the item has been moved, but depending on, it has?
It's been moved and seconded.
And seconded, we're in
Moved
discussion.
by Simon and
Right.
seconded.
So as to not have, I would hate to have this resolution fail because of differences of wordsmithing issues, but general consensus. So maybe we could get just a general consensus as to whether or not this is the right direction for, whether it be the Budget Committee or some other entity of the BET to take this up for submission at its January meeting, and then have everybody comment on it before the night of the meeting. But I wouldn't want to propose that if in fact there's not general consensus that this is the direction we're headed.
Okay. The sponsor of the resolution, do you have a comment on that?
I agree with that. I feel it serves as a guide, it was designed to serve as a guideline to departments for what the BET expects within the way they budget their projects. And we tried to provide clarity as to what we consider projects of significant complexity or material significance. And I think it could more easily be written as a guideline to make it clear that this is what the BET is expecting departments to do, and if it doesn't provide this information or doesn't provide these funds, they should explain why not.
Okay.
And I think then that serves as a valuable guideline for departments.
Are you prepared to withdraw the resolution?
I think that I will be willing to withdraw the motion.
Okay. Do we have, can we have just a show of hands on those that are favorably disposed to moving forward with this concept? All in favor? Any opposition?
It's like a presidential debate.
But let me just make one other comment. I think, and we're blessed by having representation by at least one of Greenwich's finest media tonight. I think we're sending a signal, out that we're clearly moving in this direction, and we're also sending out a message to those departments and other sponsors of construction projects that are in the process of being formed now, that a policy of this type is clearly in the works, and that even without a policy having been adopted, that any project that comes up before us for appropriation is going to be expected to defend not having either a project manager or an owner's representative.
A full-time.
On a full-time basis. Mr. Crumack?
Yeah, I move that this resolution be referred to the Budget Committee for consideration of budgetary guidelines, both as a future policy and for the current budget year.
Do we have a second?
Second.
Any comments? Any further discussion? All in favor? Aye. Any opposition? Unanimous. Thank you. We have a need to appoint an interim liaison, temporary liaison, to the Glenville School Building Committee in view of the resignation of our chair, and who also happen to be wearing the second hat of being a member of that particular building committee. And I'll take nominations at this time. Mr. Walco?
Just for clarity before into nominations, so this would be just to complete this term?
That's correct.
Okay.
Correct.
Just to make sure that's clear. I know it says new, but it should really say interim on our agenda. Okay. I nominate Art Norton.
Okay. Do we have a second? Okay.
Who's seconded?
Mr. Mason. Okay. Any discussion? Any opposition? Any, all in favor?
Aye.
Any opposition? It's unanimous. Thank you. Next under, I'm sorry?
Just point of information, the meeting of the Glenville School Building Committee is 7:30 tomorrow morning.
Should we vote again?
Should we vote again? Should we nominate?
Okay. Thank you for not bringing that up earlier.
So that means it's 11-1?
Is there going to be a Sherman-esque speech at this point in time?
I knew that was scheduled for 7:30 tomorrow morning. That's why we proceeded this way.
Okay, thank you. We're now at the point of rescheduling a BET committee to a new date, to January 22nd. Do we have a motion in that connection?
So moved.
Second?
Second.
Mr. Simon?
Point. This is the BET monthly meeting, right?
That's the
Not
regular
the
monthly
executive
meeting, not the organizational meeting. Correct.
And not the, right, but it's the normal monthly, January monthly meeting.
That's correct.
It's not a committee meeting.
That's
Correct.
correct. Any discussion? All in favor?
Aye.
Any opposition? Unanimous? Thank you. Mr. Walco.
I have 2 points. Thank you for the floor. Just to recap our January schedule, it will be, January 2nd will be the organizational meeting, then January 14th will be the special meeting to take up the Ham Ave Building Committee request, and then January 22nd in the Cone Room will be the regularly scheduled monthly meeting. Note the difference in place, as this room will be secured for voting machines.
Okay. Thank you, Mr. Walco.
At this time, Mr. Chair, we have tonight 3 members of the BET who are leaving us, who are moving on to greater endeavors. First, we would like to thank and recognize Jim Himes for his service on the Board of Estimate and Taxation. Jim has served the past 2 years on the BET's Audit Committee, OPEB Ad Hoc Committee, and Investment Advisor Committee. He's a former banker at Goldman Sachs, proud father of 2 girls, and lives in Coscob, and we wish Jim the best of luck in his bid to remain in politics. Congratulations. We are also, tonight, losing Alma Rutgers, who is coming off the Board of Estimate and Taxation. Alma epitomizes dedication and self-sacrifice for the good of others. Alma has been involved in town government for the past 22 years, 44 on the Board of Health, 6 years on the Greenwich Housing Authority. Oh, sorry. It's a little long. Been around, Alma. 12 years as a member of the BET. As a member of the BET, Alma has served on the Affirmative Action Advisory Committee, as Health and Human Services Liaison, on the HR Committee, and liaison to the Community Development Block Grant Advisory Committee. Most recently, Alma has served as our clerk for the past 4 years. She has also capably served as the Democratic caucus leader for the past 4 years. Currently, Alma is in the Masters of Arts in Writing program at Manhattanville College. Alma's gentle demeanor will be surely missed. Good luck, Alma, in all that you do.
Thank you.
Thank you. Thank you. I'm very touched by those words. Thank you.
Thank you. Thank you, Mr. Walko. Now for the main event. Peter, you often said during the recent campaign how proud you are about Greenwich. I would respond, au contraire. It said it's we are who are proud of our chair, now our first selectman. Through your commitment to the BET for the past 10 years, including chair for the past 6, we've observed your dedication to the town and its citizens. We value the relationships each of us has with you. Judging by your electoral mandate, the town's residents share that feeling. While serving on the BET, you simultaneously served on the boards of Greenwich Point Conservancy, Western Greenwich Civic Center, Boy Scouts of America, and the Greenwich Symphony Orchestra. Prior to the BET, you served on the RTM for 10 years, including several as district chairman. We commend you for your leadership and community service. In your day job, you also achieved success through 18 years with an institution now under the flag of the Bank of New York Mellon, rising to a vice presidency. We wish you all the best in your new capacity as the town's first selectman. The BET membership looks forward to working with you in the next term and watching you weave a fabric of cooperation and true consensus. Thank you.
Great, thank you. Thank you all.
And finally, we're inviting everyone still here to wait following adjournment. We're going to have a little celebration.
Mr. Chairman, does Mr. Campbell understand his duties as the junior-most member of our body?
Taking your prompting.
Will the chairman accept a motion to adjourn?
He will. Thank you.
So moved.
Okay. Second. Okay. Thank you all.